Equity markets are ending the year on a positive note. Investors are confident that major central banks will start cutting interest rates in 2024. For the currency markets, this is a sell signal, and thus the US dollar index lost 2% by the end of the year, while over the last 2 years it gained about 15%. We will continue to review how the new year will start in the financial markets and what triggers will influence investor sentiment. You are watching the Traders Calendar for the first trading week of 2024. Trading activity will begin to pick up at the beginning of next week. On 1st of January, the markets are closed, but from the beginning of the 2nd of January of the Asian Pacific trading session will start to arrive news, and we hope that there will be positive. For example, the Chinese industrial sector is expected to post growth. In the last reporting period, experts managed to place the market with an unexpected rise of the PMI index above the 50 mark. A slight downward correction from December's reading is expected, but the figure should remain above the dividing line between growth and contraction. Such news should be compensated by the growth of risk appetite in the markets, from which the Australian dollar may strengthen as a proxy of the yuan and as a currency of the commodity supplier to the Chinese industry. The US PMI will likely rise, but the perception of this data may be different, as the index may remain below 50 points. And this means that the downward trend is still intact. In general, experts have been predicting a recession in the US economy for a long time, but market sentiment is dominated by speculation only on the topic of the Federal Reserve's interest rate forecasts. Therefore, we do not rule out that this news will be ignored by traders. On Wednesday, all eyes will be on the publication of the Fed minutes. Markets will scrutinize all the details of decision-making by the US Central Bank, and in this case, investors will study the rhetoric of the members of the Federal Open Market Committee, and in particular, those who will be eligible to vote in 2024. In the new year, the voting members of the committee will include the presidents of the Federal Reserve Banks of Cleveland, Richmond, Atlanta, and San Francisco, in addition to the regular presidents. So far, about 80% of the market is pricing in a March rate cut. The Governing Council of the European Central Bank may plan an interest rate cut. However, the preliminary estimates on inflation in the Eurozone countries, to be published on Friday, January 5th, may change the minds of economists and force them not to rush to shift the monetary policy. It's assumed that the growth rate of consumer prices will return to 3% year-over-year, thus shifting all investors' attention to the US Central Bank. The Fed will be the first to start easing. Therefore, it's more profitable to keep your funds in euros than in the US dollar. The first trading week of 2024 will end like all the first Fridays of every month with the publication of data on the US labor market. Analysts expect the data to be weak. The number of employed in the United States non-farm sector is expected to increase by only 150,000. Such news will be a clear signal to the US Central Bank about the weakness of the labor market and the need to reduce the interest rate in the near future. Since we are talking about rate cuts again, we are waiting for another sell-off in the US dollar, and we will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading, have a nice weekend, and see you online on Thursday.